This is an analysis from Alpha Business Media. Today, we're diving into one of the most fascinating and, frankly, puzzling real estate markets in South Asia, Kathmandu. So, on the surface, the city is in the middle of this incredible property boom. Prices are just reaching astronomical levels. But, when you look a little closer, this boom reveals a really deep paradox. The prices keep climbing, but they seem totally disconnected from the financial reality of the people who actually live and work there. It makes you wonder, who is this market even for? In this explainer, we're going to break that paradox down, piece by piece. First, we'll lay out the core problem. Then, we'll look at the disconnect between those crazy prices and what you can actually earn in rent. After that, we'll dive into the huge affordability gap, figure out what's really driving the market, and finally, look at the consequences and what the future might hold. All right, let's get right into it. At its heart, Kathmandu's real estate puzzle is a conflict between three things that, honestly, just don't seem to add up. Think of it like a three-legged stool where all the legs are different lengths. You've got one leg that's this dizzying, rapid price growth. Another leg is the surprisingly low income you can get from renting these places out. And the third, and maybe the most wobbly leg, is this massive gap between property prices and what the average person in Kathmandu can possibly afford. So let's start by looking at those first two pieces of the puzzle. This disconnect between soaring property values and the actual income they generate for an owner. To really get a sense of the scale here, just look at this number. 180 million Nepalese rupees. That's well over $1 million US for a single house. And believe me, prices like this aren't just one-offs. They are quickly becoming the new normal in the city's best neighborhoods. But here's where it gets really interesting. Look at the return on these properties. A two-bedroom flat that costs, say, 20 million rupees might only generate a rental yield of 2 or 3% a year. Now, for an asset that expensive, that is an incredibly low return. It tells you right away that investors aren't buying these properties for steady rental income. Something else is going on. There's actually a name for this phenomenon. It's called yield compression. It's exactly what happens when a market is driven by the hope of future price gains, not by the reality of present-day income. Investors are basically betting that the asset's value will just keep climbing, so they're willing to accept these tiny returns for now. Okay, so let's shift gears and turn to the human side of this paradox, because this isn't just about spreadsheets and investment metrics. It's about a market that seems completely disconnected from the people it's supposed to serve. This quote, it just captures a feeling that's spreading all across the city. What used to be a key milestone for the middle class, owning your own home, is now just slipping further and further out of reach. And that's creating a real sense of hopelessness, and it's fundamentally changing the social fabric of the city. And here's the cold, hard math behind that feeling. The average monthly salary is about 31,000 rupees, but the monthly payment on even a modest 5 million rupee home loan is nearly double that. The numbers they don't work. It's as simple as that. So that brings us to the big question, right? If local salaries can't support these prices and the rental income is so low, what on earth is driving this market? Well, the answer seems to be a powerful mix of outside money, deep-seated cultural values, and, frankly, a lack of other good options. It really boils down to a perfect storm of four key forces. First, you have a massive injection of cash from Nepalese working overseas. Second, there's a powerful cultural belief that land is the only truly safe investment. Third, there just aren't many other places for people to put their money. And finally, you have a classic supply problem, not enough new land or housing to meet this intense demand. Let's talk about remittances for a second, because this is a huge piece of the puzzle. The money sent home by Nepalese working abroad makes up a staggering quarter of the country's entire GDP. That's a massive reserve capital, and a lot of it flows directly into real estate. But here's the crucial issue. Instead of fueling productive parts of the economy, things that create jobs and long-term value, a huge chunk of this money gets funneled straight into land speculation. It inflates a bubble without actually strengthening the underlying economy. And you have to understand, this isn't just about economics. It's deeply cultural. In Nepal, owning land is about so much more than finance. It's about social standing. It's about security for your family. It's about your legacy. In an economy with few other stable investments, land becomes the default safe haven. And that creates this relentless demand, no matter how high the price gets.
So, what are the consequences of a market driven this way? Well, the fallout is significant. It's creating these deep social and economic challenges that affect not just the city, but the entire country.
The results are pretty clear, and honestly, they're worrying. An entire generation is being priced out of owning a home. Wealth is becoming more and more concentrated in the hands of those who already own property. This creates real risks for the banking sector, and it fuels this chaotic, uncontrolled urban sprawl as the city just pushes outward.
And this chart just lays it bare. The wealth gap is exploding. In Nepal, the richest 10% now hold over 26 times the wealth of the poorest 40% combined. And real estate is one of the primary drivers of that divide, creating a cycle where property ownership basically dictates a family's entire economic future. So how do you even begin to fix a problem this big? Well, it's not easy, but experts point to a few key paths forward. Things like modernizing land policy, kickstarting the supply of genuinely affordable housing, changing the tax system to discourage speculation, and simply making the market more transparent so everyone knows what's going on.
Ultimately, when you boil it all down, this whole paradox reveals a pretty stark truth. Kathmandu's property market isn't really a housing market anymore, not in the traditional sense. It's become a market for financial assets, and it's operating in its own reality, largely separate from the actual needs of the local people.
And that leaves us with the final and really the most critical question. The challenge for policymakers and for the city itself is immense. Can Kathmandu find a way to reform its market? Can it shift the focus from fueling speculation to building a sustainable, equitable city where a home is something you can live in, not just an asset you can trade? The answer to that will define the city's future for generations.
This has been an analysis from Alpha Business Media.